Welcome back. High-end computing solution company called Netweb Technologies IPO opens today. This is a company that provides, supercomputers. They provide private cloud infrastructure. They help make data centers. And this company has also recently forayed into new telecom product lines like network switches, 5G open radio access network. The price band for this IPO has been set at 475 to 500 rupees per share, and they're looking to raise 610 to 631 crore rupees, which will be a combination of a fresh issue of 200 crore rupees and plus an offer for sale of 425 crore rupees, where the promoters will be exiting. So just to understand supercomputers, these will be used by the R&D organization of the Ministry of Electronics Information Technology. Space organizations will need supercomputers which have very, very, very high analytical powers. Education institutions also use like IIT, IIMs. These are clients of Netweb, the NMDC data center, the YOTA data center. These are all big clients of Netweb. So it makes supercomputers, it gives you private cloud, and plus it's now getting into telecom and data centers is also a business. Sanjay Lodha, the promoter and CMD of Netwebs Technology, is with us on the show now. Mr. Lodha, afternoon, and thanks so much for joining in. First, if you could tell us, why are you, selling 425, crore rupees via an offer for sale?
Yeah, so basically, thank you for basically having me on the show. So Netweb, we started this company somewhere around 25 years back. Okay, and as you know that we have been all our technology, we are a completely full stack company. We completely design our hardware, we manufacture our hardware, we have our own complete software stack and service stack. So we do end to end. And primarily, very few companies in the country today, Indian companies in the country today, are focused into the high-end computing. So we have been maintaining our focus for the last 25 years and have been really trying to develop everything indigenously. So having said that, so basically what happens is that since we are working on the newer technologies as well, we are also getting into networking switches. Networking switches is again enterprise-grade networking switches, primarily, which is really needed because at this point of time, basically there are very few manufacturers in India for networking switches of the enterprise grade. The other is we are developing a complete 5G Make in India O-RAN solution that includes the hardware and the software. So basically, it's a hardware plus software story. So we require talent actually. So reason is that basically for the basic purpose of the public issue is so as to basically attract talent and to reward our employees and reward our basically the other stakeholders who have been with us for that long and continued in this journey. So because our competition is not local, primarily our competition is MNC. So what happens is that definitely we need more talent. More talent should definitely join us. And we
Sir, but the offer for sale money is going to go. Sir, but the offer for sale money is going to go to you, right? To the promoters.
That is true, but basically, yeah, so at least we had a compulsion of diluting 25% as per the Indian regulatory law. So without that, we couldn't have really gone public. So basically, or gone with listing. So I think that was the major reason for that. If you see our financials are very clear and you will have a better understanding of our funds.
Oh, absolutely, Mr. Lodha, your financials, at least the past three years track record, I mean, looks fabulous. Just for the benefit of viewers, CAGR growth of the top line is 40% plus. EBITDA line has grown at over 100%, and profits have been doubling as well. So last 3 years track record is fantastic. But I just want to understand, one aspect of your business model, which is the relationship that you have with government agencies, because a large part of your revenue is coming in for a lot of the works and the orders that you're executing for, like Rima was pointing out, METI, Ministry of Electronics and IT. So just to understand, what is the receivable cycle like when you're executing this government contracts? Should your investors be ready for maybe some delays, longer working capital cycle, and also margins? How do the margins of the government contracts compare with the non-government side of your portfolio?
Yeah, so very good question actually. So really, basically the government definitely, if you really see, our model is very balanced. 50% of the revenue comes from the government and 50% of revenue comes from enterprise. And the enterprise we work in as always large enterprises. We are not into the small and medium based kind of enterprise. Those are not our customers. Primarily our customer is large enterprise, and government also basically is primarily government R&D, research institutions and education who already have allocated budgets. Okay, because normally they go out for tenders or something only once they have allocated budget. So telling you frankly, maybe you will, because the normal impression which people have about government is different, but our experience is completely different, because the segment we work in the government is, I think, even it pays us even better than the enterprise actually, because basically the enterprises we deal with are all large enterprises. They have payment cycles of around 60 to 75 days. And I have seen actually that the government payments come before the enterprise payments. So basically payments receivables has not been an issue. And in this last 20 years, you may see there has been no bad debts in the company. So it has been a very, very stable kind of a model. The second question was about margin. So margin basically for us, what happens is that if you really see, my gross margins have been around 25% plus actually. And the reason you see the current the current increase in margin for last 3 years approximately, the reason is that basically we were, because as I mentioned to you, we are a full stack company. So we were developing our software stack. My competition will primarily be a hardware company and MNC hardware company who will bundle the software from the third party and then try to sell it. Where in our case, it's end to end. The software and the hardware completely is from us. So our margins are very, very similar, both in case of government as well as in case of enterprise.
Okay, good morning, Mr. Lodha. Thanks for joining us. So sticking with the margins, on the EBITDA margins, I think we've seen a rise from around, 5% to 16% in just a span of around 3 years. Can you tell us what is the kind of margin trajectory you expect going forward? Is it going to stay around the 16%? Do you expect to do better than this in the coming few years?
Yeah, so basically, if you really see, around 70 plus % of business comes from my two segments. One is the supercomputing, the second is the private cloud and HCI. So these are the two segments which are really growth segments. They will definitely keep on growing, and we have a complete stack there. So we definitely have a very good opportunity in that space. But the new areas we are working, if you see, basically, we have been working on GPUs for somewhere around 10 years. So we have a good understanding of GPUs. So if you really see, around 7% of business currently comes from AI systems and workstations. With the kind of basically traction which the market is showing us on AI, that is really phenomenal. So basically, we see our AI systems business will grow, which will have better margins. The other new product additions like network switches, as you know, basically enterprise networking has got, because that was the only piece which was missing in our complete portfolio, which we wanted to add. So we have added that. So networking definitely will add more to margins. And services is a very small thing for us at presently, because it's a new area for us. We have started basically promoting it more. So these three areas will add to margins. But personally speaking, I don't feel my gross margins going, basically what I personally feel is that my gross margin in next 2 to 3 years will increase by around 3 to 4%. I don't see it increasing beyond 3 to 4%.
Okay. So very quickly, in your RHP, you've said the capacity utilization of your server is much lower than the production capacity of your server. It hovers between 50-55%. What percentage of your revenues comes in from this, and any particular reason for that?
Yeah, so basically the thing is that we are a different kind of a company, ma'am. So we are not primarily a brick and a mortar kind of a company which just churns out machines and tries to sell it. This is the differentiator we bring on the table. We are not a box company. So what happens is that our manufacturing capacity is primarily more depends upon the capability. So what happens is that since we manufacture our own motherboards, actually in India, server motherboard is a complex piece of product, which is basically made out of 18 to 22 layer of PCB with more than 3,200 components populated on both the sides. So basically there is a lot of high-end equipment and machinery which is needed for us. And since we are not in contract contract manufacturing, we don't even focus on basically the capacity. We just clearly focus on capability, so that we should have the capability for manufacturing those, because there are very few entities at this point of time in the country who have the capability to manufacture such kind of equipment. So our focus is primarily on that. So hence we don't focus on capacity. We don't do any contract manufacturing for anybody. We just do manufacturing for ourselves. And our is completely integrated solution, software, hardware, and services together.
Okay. All right, Mr. Lodha, very, very interesting conversation. Good luck with your issue. We have a lot of more questions, actually, particularly on how your top line could look and what, things like AI are doing in terms of just the increased computing power that's needed, right? That's a conversation for another day. Maybe we'll talk to you again, perhaps around listing time. Looking forward to that one. Thanks very much for joining in today. We will come back on the other side after this very quick break. Back to the markets, look at the technicals with Jay Thakkar of Sharekhan.